What's up, traders? My name's Clay. I own Ronin Forex, and in this video, I'm going to show you the 3 simplest indicators to use and how to use them. And even at the end, I'm going to just piece them together in a simple strategy that you can use. So if you're a beginner, or maybe you're looking for, the best indicator to use, or a system, or even a strategy, you're going to find that in this video. So got my head mentor and partner here, Angelo. What's up, man? How's it going?
It's going great, man. How are you?
Good, going good. You ready to get in this? We got some matching flowery shirts. Yeah, man, calling in the that beach life. So yeah, let's get right into it. So here we go. We're gonna just pull this up with a naked chart. And so the 3 indicators that we are gonna use. And what pair do you want to do? You want to go? We'll go gold. Everybody loves gold.
Let's do gold, yeah.
We're in a good trend right now. I think this is a good one to do. So everybody, one of the most simplest indicators to start with, and I know, Angelo, you use this more than me, is the RSI, right? So what's your experience with this?
So the RSI, for anybody who's new to trading, is not sell at the top, buy at the bottom. That is the worst way to go about it. I did it when I first started trading. Sure, everybody does it, right? Sell at 70 and buy at 30. But that's not the way we should be using it. The way I used it is I like spotting divergence. So if you kind of look right now, we're on the 1-hour chart. We're starting to get some RSI divergence here on the 1-hour as we're making this downtrend. So
what is divergence?
So divergence is when lower lows are being made on your chart, but the RSI is making higher lows.
So in other words, when the divergence is pointing in the opposite direction of the actual price action.
Yes.
Now, and I will say, be careful with this, because a chart can always become more divergent, right? So the first time you see divergence, you maybe don't want to, it's a sign, let me put it this way, it's a sign of an incoming reversal, but not the end all be all. I mean, how would you approach that?
Exactly. So it's not like you see the divergence and you're like, oh, okay, I see it, I'm entering it in the trade. The way you should look at it is that you should look at it as basically a confluence, right? That, okay, maybe we're getting a turnaround here. So if I have more confirmation on the chart, maybe your strategy, maybe your indicators, then I'd be looking for buys. So like the way I personally like to use it is I like to use it on like the daily time frame. You go up to the daily time frame and you'll go ahead. Let's see if there's possibly an example.
We're not quite there.
Not quite.
Now,
yeah.
How this would work though is, and yeah, it's definitely going to be more significant on the higher time frames. And if say price action moved its way down here, but then RSI kind of stayed around this area, that would be a really significant divergence that I think would be paying attention to.
Yeah, so that's how you can use it. You can say, okay, maybe we're getting divergence here on the higher time frame, the daily, so maybe we're not going to break through that low, in which case then you can go to your strategy and start to look for it. So it's a great way to kind of have a bigger idea of the bigger picture.
So that ties us into probably the easiest indicator to use trading. It's the one that I use just as an indicator of trend. And that's going to be a simple moving average. Now, we're going just straight across here. So you can see we're below on the daily chart. So this is definitely signifying it's bearish. Now we'll go to the hourly though, because this is where I'm going to be doing most of my trading. And now if you look at it like here, you can see we're at a good 45-degree angle, right? So like this is a downtrend for sure. And a strong downtrend. So like I would look at this and looking at the RSI and everything else, we are a bit overextended, but I would be careful where I'm at. So this is a 200 simple moving average, but you can see price will always come back to it. It's like, think of it as having a tractor beam, a magnet, right? So this is a great opportunity here. You see this big sell-off in the hourly, and where does price go? Right? It even breaks the 200, and I would look at this as a false breakout. We weren't able to continue above And so price broke down, and then what happened afterwards, right? This is even one of my simplest strategies is looking for pullbacks to the 200 and then going accordingly around that. How do you like to use it, Angelo?
No, I think exactly the way you just explained it is perfect. So, when you get those taps where price is like super overextended, like it was right here, rather than thinking of it as like, oh, it's a break, okay, buy, you could look at it as, okay, is it a false breakout, which is exactly what ended up happening. Price moves back down. You can kind of use it as an area of entry or a confirmation of your short continuing down.
Yeah. And so now just tying these two together. So we see the RSI and we are below the center line here, just even on the base level, right? So like we cross below the center line, and I'll just make this center line a little bit thicker so you can see what I'm talking about. We cross below there, and there we go. And so this is telling us that, we are pretty bearish, especially if we get into the oversold areas, right? This is a good example. You don't want to buy right there. Maybe it would have worked out for a minute, but went right against you. But so now we're below the RSI here. We're below the 200. So really for me, I'm only looking for sales. If I was going to use this as a simple strategy, which I think would work great and somewhat similar to what I'm doing in the accelerator, it's like, okay, great. Where could I take my entries? Now, this is where it get a little more complex, but using the Bollinger Band as an entry signal is a really, really solid way. And it's a great strategy it's a great indicator for trading trends. So now, even if I just throw this on here to put this and wrap up this just strategy itself and these three indicators that you can use to really just like start to kind of see the market different. The standard settings is 20 and 2 standard deviations. Now, I prefer, if I'm using a Bollinger Band, to make this a little bit wider. The standard deviation's a little bit wider. Now, if I'm using it, if we're below the 200, RSI, below the center line here, right? We barely peak back up, but overall, we're still, the main thing that wants us, this is RSI is just telling us the overall, bias of the trend, the overall attitude of the trend. So the whole attitude is sell. We're looking below the 200. We're not looking for buys. So that just takes out 50% of it there, only looking for sells. And so this would be our entry here. This would be one of our entries. Now, this could be an entry here, short little move. I mean, this is the hourly. Now, here, of course, we break out, we break back inside. You could take a trade here, but now this is where the RSI, you would want to be aware that we're above the center line here, right? So, this isn't where you would ideally want to get because we're still moving higher. And that's telling us that we're going back towards the 200. But if you know that we always go back to the 200 to reset itself, I think the perfect entry using this. What do you think, Angelo?
I think kind of using it in accordance with market structure, right? So if you're kind of able to identify higher highs, higher lows, lower highs, lower lows, you can easily, like right there, we clearly identified that the structure has now changed back low.
Barely pull back to the Bollinger right there, right?
Yeah. And even if you missed that, let's say you missed that initial tap, when you come back and look, you could have re-entered and got that whole way down. So
right. As a confirmation that, hey, we've already broken the Bollinger, we're moving back in a downtrend. And
exactly. But always wait for a candle closure. That's something that, if you want to be aggressive, and go for it, which is awesome. But, I think if you want to have that extra confirmation, waiting for the candle to close will confirm that.
And if you're using TradingView, most new traders will, you can set the candle closure time on the scale on the side. And the way to do that is to right click, go to your settings, go to scales, and count down to bar close. You can see that on the right side of the screen there. So now This is an hourly time frame. We got 5 minutes till that bar closes, so you might want to wait, right? And so now we could even get a bounce here, but you'll see this would open us up, and now you have three indicators, super easy to use.
Yes.
You know, it's not the end all be all. You don't want to go just off of the indicators alone, but you know, here's a good example of us, you know, moving higher, and where this would tell us our potential opportunities for buys would be. Here we are below the 200, so we're using the 200 as, if we're below, we're selling, and if we're above, we're buying. And if you're looking to trend trade, one last thing to end off, if price is going through the middle, the easiest way to spot a range is if the 200 simple moving average is going through the middle of those candles. So so that's a simple way to get started. And of course, you know, if we go into my strategies in way more depth, they're not complicated, but I explain them super easy. They're easy to use in the accelerator. And you know, if you want more information about that, click the link below, like this video, subscribe to our channel, leave a comment below if you have any questions. Angelo, thanks for hopping on, man.
Thanks, man.
Yep. See y'all next time. Peace.